Good day, everybody. It's Trent Clarenbach with the Clarenbach Special Crops Report. Today is February the 3rd, 2026. Let's talk red lentils. We haven't looked at red lentils for a while because our analysis has not changed. The analysis has not changed, and I would argue the price really hasn't changed either. That kind of makes it interesting, makes for a boring market because volatility, I guess, is probably something we want. We want it if it's going up, not so much if it's going down, but you go on my website and you can see back where we did on August the 1st, we published the red lentil analysis, and we were bearish at that time, and we're suggesting that 28-cent level would be a good level to make some sales. And since then, the price has dropped off considerably. So right now, my price index is trading at 22 cents. So that's approximately 22 cents lower than it was back at August the 1st or August the 2nd when I published that video. Back in November, we also identified that 20-cent level being important because why? It's a round number. We've talked about round numbers. 20 cents a round number. Guys are going to put their sell targets in at 20 cents. If it breaks below 20, they want to sell more, or they want to price goes below 20 cents and people start to panic, right? Yeah, interesting though. So the black line here on this weekly chart is the price index price, closing price for the week. The red line is the 10-week moving average. And what's really interesting to me here is we are seeing a break above a flat to rising 10-week moving average. Now, I really like to see it get above 22.5 cents, say 23 cents for good measure. Right now, that's a good sign. Look what's happened in the past when we've gotten above a 10-week moving average. We've had some success, right? We've had a rally in the price. Now, between that and the 20-cent level, it could be a sign of things to come and a reason to be some bullish. So right now, I'd like to see how this plays out. Maybe get a rally in the price. And if we get a rally, then maybe we get up to that 24 cent. Maybe we get back up to the previous sell signal back in August of 28 cents. That's entirely possible. A little early. We need to start making new highs above 22.5 cents a pound. But we're above this flat to rising 10 weeks, so it's got some hope to it. Let's look at the monthly chart and the candlestick chart because the candlesticks contain more information. People say technical analysis doesn't work. Trent, works in the stock market, doesn't work in other markets with low liquidity like farmland, and doesn't work in special crops. Well, Virginia, it works. Take a look at this. These are Fibonacci retracement levels from the low to the high. You can see how significant, I would argue, this level was, maybe through here. Right now, we're at this 78.6 fib level, which is right around that 21 cent a pound level. We seem to be finding some support in that region. Look at down here at 88.7. Argue that was important too, around that 16 cent level. So we want to be aware of that. And this is why if we break below 20 cents, then I think we have to assume that we're going to continue on our way down to 16.5 cents a pound level. But right now we're not. And this weekly chart, go back to the line chart here in this 10-week moving average. We could get a rally here. We could get a rally. So we'll see how that happens. A break below 20 cents, and that's definitely a sell signal for me in my strategy. Right now, let's wait and see what happens. If I don't have to sell in the next couple of weeks or your time frame for your cash requirements, but yeah, we might see a rally here. My name is Trent Clarenbach. It's sunny in Saskatoon. Life's good.